Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you gotta get cut. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Well, we actually have some reasonably significant news this morning. Let's see here. In addition to the jobless claims, we also get quarter-over-quarter final GDP, NPCE prices. So that's an important data point coming up here in about 4 minutes. Just really quick over here on the charts. I got to do that rollover again. Yesterday. ZN, you know, they had a pretty decent climb yesterday. It came back after the auction, rising back overnight. S&P 500 really strong gains yesterday. Slight pullback. Oil taking a big jump overnight. Gold and silver kind of sideways. Copper heading downside. Bitcoin not really going much of anywhere, and the dollar's still below, still within the 103.5 range. So that's basically where we're at. We are still in like low liquidity, difficult trading world. So keep that in mind, but we are going to get some news here that is fairly significant. So that GDP, where we come in on that number, we're expected to come in at 2.9. This one is not necessarily typically a very big mover because we usually come in really, really close. At least compared to like the advanced GDP. But I think we will have some move. And then those initial jobless claims is really important too, right? So it's kind of sorted out. Yesterday, let's just keep in mind, yesterday, the markets definitely reacted to the consumer confidence numbers and all of that yesterday, but it was kind of confusing, not entirely sure why it moved the way that it did. So let's just keep that in mind. You could get some weird behavior here because of the holiday and everything else. All right. Put these order windows out over here, like might find some reason to take sim trades. It looks to me like the micros are not in a position for me to be taking a trade. David Tupper on CNBC, I'll be short bonds, leaning short on equity markets right now, says this because he believes that central banks are saying that rates will keep going up. I don't believe they will. I think that they'll stay. I think they'll get to February and they'll stop. We'll see. We'll see. I think that's what the market pricing suggests, at least. It kind of doesn't help because that's what the market pricing is, but that's what I think is going to happen. You're not sure? Well, I think we might get a good hint here. It might not mean that it's worth trading, but I think we might get a good hint here. Okay, so starting with the initial jobless claims, slightly under expectation, 216 versus 222. Okay, this is actually really bad. The GDP final was 3.2 versus 2.9. So that's going to cause some selling. Oh, interesting. Interesting micros. Did you see how me putting an order out there kind of shifted the micro market? They're like, okay, we'll go to the real number. All of the robots tried front running me. I always get a kick out of coming into the micros and putting an order down and immediately seeing a reaction to it from the robots. I put the order at 66 and now all of a sudden there's an order at 66.1. Okay, that initial reaction, I would say that's a pretty clear negative reaction to the GDP being higher than anticipated. The core PCE price is 4.7 versus 4.6. I guess that's okay. If you consider it, no, why would I do that? You know what? I was thinking about this yesterday. Actually, I you know, like after the stream, because we were talking about, oh, what are the things that we can do that would be like the most beneficial to the stream right now? You know, because it is kind of more of a game to me, right? Like we want to have success with the YouTube. We put a lot of effort into it. I feel like that we should get paid for it. And I believe that the people that watch the channel and the world in general benefits from the content that we create. And part of the problem is just that some of the things that we have to say are things that aren't interesting or that people don't want to hear, because of people's natural inclinations, and how do we get around that sort of stuff. And it's also a question of what provides the most value to people. So I was actually looking at it like, how much do people take advantage of the affiliate links versus the indicator package? And the reality is actually, I think more people have taken advantage of the indicator package, believe it or not. So maybe I should try and focus on that a little bit more than I have. I don't know how I do that here on the stream without like not showing, without changing my screen around. But maybe like every 15 minutes we should go over and we should just kind of make note of the spreads and the custom indicators and stuff. Okay. But then so that's all a driving factor, right? But then I was looking at, like, really thinking about it, and I was kind of like, you know what though, like at the end of the day, I don't really give a shit. like I want to do all of those things, but at the same time, like what is it that truly matters to me? Well, what truly matters to me is, number one, excellence, integrity. Well, integrity is first. Integrity, excellence, and teamwork. That's what matters to me, number one. And number two is community, right? I'm very disappointed by how community has gone in this world. I feel that the system wants to pull us away from communities and not want us to have communities. I think that retail traders are particularly vulnerable to the tricks of the market. I'm not saying it's a conspiracy. It's just this is just the way that the market microstructure kind of leads things. It kind of preys upon the small guys, and we are easier victims when we're isolated from each other. So building the community is the more important thing to me, right? So really the question that we should be asking ourselves is, what can we do with the stream and the Discord that helps our community the most? That's really the question that we should be asking, because like how many people are watching the stream, and how many of them decide to switch over, you know, decide to take advantage of the tools that we're providing? Probably not too important to me. Those are all kind of like side benefits of what's actually important. You know what I mean? That's what I decided after our conversation yesterday. But with all of that in mind, I did shift things around so that it should be recording this stream, and I think we should be fine. I don't know if I actually need the video card to do this well. I think the video card will help, and I should look for an opportunity to get one, but I don't think that I need to be a rush. Like, I don't need to do it today. So I am recording that. And like I said, I don't know if I can, I don't know if I really want to, like, I think that having the S&P 500 up here, for instance, helps a lot. I wish that we could do things with Jigsaw here so that what instrument this is popped out more. You know what I mean? Maybe I can ask Pete about that. But yeah, we can still come over and we can say, okay, so we just had our news. What's going on here? Well, when we're looking at our spreads, let's see here. Win Alt P. Okay, so now you get the big crosshairs. So if we look at our spreads down in here, we are seeing a slight bit of steepening so far. And I think that's what we would expect to see here is with GDP being higher than anticipated, that would lend support to the idea that the Federal Reserve needs to continue hiking interest rates, and ergo current, short-term interest rates are going to rise higher than the long-term interest rates because they don't think that it's going to last. And so you get flattening, right? Also, looking here, the dollar looking very strong, heading up to 103.74. Very important. These are some indicators that I provide at speculatorseth.com for NinjaTrader, my spread, my dollar index. I also note that here on Alice, when we're looking at like overall market opportunity, I'd like to see it over 5,000. So we're still kind of in like a sketchy area where you might not be worth it to try and get involved in ES, but it is picking up. So I think we might have some opportunities to get in there. And I should just note the cumulative deltas are just sell across the board, sell in ES, sell in the 30s, sell in the 10s, sell in the 5. How's that? Yeah. Now I have some food, so I'm going to. You guys can leave your comments on everything that I just said there, and let's kind of see how this plays out. It seems to me like the market volume and volatility is dying down extremely quickly, isn't it? Yeah, I think you're right. I should make it bigger. Like if I come in here and I'm like, okay, here's what we're seeing in the treasury. Really what I need is like, because even then you're looking at a tiny little section of the screen when I make it big, right? So I need to figure out how to make this more prominent. Let's talk important stuff. What else is there? Well, steepening. I need to wait to like, I don't know, zoom in on that one specific area, or I don't know. Then you never read the exact previous comment. Wait, which one are we talking about? Come on, that was Uzi's suggestion. You say you were thinking about it after having robots view it? No. Maximize the chart so the audience can see it. It's just 2 clicks, make the chart big. Explain what you're looking at, then restore it and move on. How much of this will go to Uzi listing? I don't understand what you're saying, Lucas. Going big probably does help, but it's the problem is we're looking at one data series down at the bottom here. Well, I suspect that we might be getting some really strong order book effects here because the treasuries seem to be, I mean, it's all sell, but they seem to be having a very difficult time getting below 19. But the S&P 500 is just keeps going. It's starting to look a little ugly. In fact, well, I wouldn't say that we're like to significant levels yet, but you're getting some pretty strong autocorrelation in the price here, and make it big. Bottom data series here, autocorrelation, we're at 0.6. 0.8 is like really strong. It looks like we're headed there. See if we get there. Autocorrelation is something we want. Okay, well, looking over here at the micro treasury yield futures, I'll put my crosshair up here. 3.670. That was like the best price to buy that they gave us after the news. We could have we could have done a market order into it. And that's only like just now bid. So not getting too good of a deal in the micro treasury yield futures, but who knows? Rates could go significantly higher from here. So I might come back in 30 minutes an hour from now and be like, if only I could buy it at 3.67, right? Maybe what we need is an OBS plugin that like zooms in on your cursor. Okay, well, here's something called Magic Window. Good morning, Tom. There's got to be something more recent. That was like 2016. This is a Python script. Not perfect. I would really like something that like just follows you no matter which screen you're on. Kind of looks like that you have to that the Python scripter is really the best way to do it. What is PyWinCTL? With the PyWinCTL, you can retrieve info or control windows from other applications, as well as use a cross-platform toolkit to manipulate your own application windows. I see. Let me see here. So I think I need to do PowerShell. $399. Okay. Oh, it's Control-Z in Python. Interesting. Python-m pip install pywinCTL. Oh, it looks like we did finally get a little bit of an excursion 3.675. I suppose, you know, if I still really wanted to get in there, I could do it now. We are starting to see like the iceberging again though, although this is on the offer. So are they going to bust 16 here? Okay. And then where should I put this script? Actually cancel that. So I want to come in here. Let's see here. Is it like if I come over here to charts and then what? Sources, left, properties. No. Is it filters? No. Where do you get into the spot where you get the where you put the script in? My guy at the CME is reminding me Monday the markets are closed. Yes, because that would be because it's Christmas, but Christmas is on a Sunday. Yeah. Listen, I don't want to sit down and say you shouldn't trade next week because somebody's going to do it and they're going to make money and like maybe something crazy happens next week, but I would highly recommend considering just doing something else next week because it tends to be the quietest, least liquid time of the year. Oh, okay, so this is I need to go into settings and hotkeys. Now they're still kind of hanging out here. The spread has increased over here in the micros, so I don't like that. I don't think I'm gonna take a trade here. Like it shouldn't be 10 ticks in this situation. Oh, okay. Go to tools, scripts. Wait, it's already in there? I haven't done this before. There's no way. Huh. Yeah, I didn't already have it. That's weird. That's weird. I think that my Python settings are wrong here, though. PowerShell again. What is the correct get Python path? Or maybe I say which Python? I don't think that works on Windows, does it? I don't use these command line variables enough to know the correct syntax here off of the top of my head. Okay, fine. Do it this way. Import sys, locate Python equals sys.exact prefix print locate Python. Move back up. Ah. Seth. App data local. Programs. Python 3.9. Select folder. There we go. Okay. Input. Okay. Progress. This script. Oh wow, that was like a year ago. I'm just gonna delete that. And Program files. OBS Studio. Data. Oh, okay. OBS plugins. Front end tools. Scripts. There. Oh, jeez. Being difficult. As is the market being difficult as well. Because, yeah. It's not really going much of anywhere, is it? The treasuries, at least. Is the S&P 500 still? No, the S&P 500. Well, the S&P 500 did get to, full on autocorrelation, but they're kind of going sideways here now. Okay. Okay. All right. Zoom source. Left. Zoom window width and height. I think we do 1920 by 1280, right? $1080. I think he wants us to sell all Hang Seng positions. Okay, and then I need a... Okay, so let's do... Aha. Hey. Okay. Progress. Progress. Oh, this is how much it zooms in. So really what I want is like, let's see here. I think I want like 1920 divided by 4, maybe. 480. Yeah, let's try it. 480. So then that would be 1080. 1080 divided by 4 is what? I should know this off the top of my head, but I don't. 270. Let's try that. 270. Okay, so do I need to close this window to change it? Oh yeah. There we go. There you go. Now you can see, hey, look, we're steepening. Da 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 da. Huh? You see that? We're steepening. Yeah. I think that's a little bit too zoomed in, don't you think? What do you think? 480 too much? UJ, good morning. What is the ratio on the knob? I am using 5:2 at the moment. Did it change on me? You know what we need to do is we need to make like a little place that just tracks. It would be nice if the CME did it, but I think the next feature I want to make for my indicators is it will just go to a little place with a JSON file that will have all of the spreads defined for you. And then when you pull up the thing, you can choose to either go custom or pick a predefined spread. And then it would automatically do that. And then I would have to come in every month and update it or something like that. Oh, that's right. You did tell me about that. Has it shifted to 2-1? Wow. I mean, it's still telling me what I need to know, right? I'll shift it. I'll change it here in a second. So I think what I need to do is 640 by 480, right? 480. No. Although that's better. I think I got the height wrong. Oh, 0.562. 1920 times 0.5625 should equal 1080. So then 640 times 0.5625 is 360. Aha. Now, I don't like that it's not What if I just completely take those down to 0? Okay, well, we'll try that for a little bit. Let me come back to this documentation here. Oh, active border. 0. No. Active border 0.5. Yeah. So now I can have it follow, right? And then I can stop it and I can say, look, we're flattening. Okay, so I like that. Maybe I need a Stream Deck now. So Akshay says it's changed to 2-to-1, hey? So let's go change that. Let's go just verify that real quick. See me. Inter-commodity spreads. Man, if you got long 367, you're really frustrated. Yeah, what I need is I need a location. I need a web location that I can go to that will give the spreads to me in a JSON format. That's what I need. CME, get on it. That should be easy for you guys. No, on this one, it hasn't changed. On this spreadsheet, it hasn't changed. You say that the analytics tool says it? Let's go look at that. Treasury analytics. And where would it say that? IC spreads? Knob. 2-to-1. Interesting. So that page is slow. Okay, so that's a really big change too, because it's a okay, so front leg will be 2, back leg will be 1, -1. See how that changes it. It's a little bit different. So on that point, this one here, the 2 and 10. So the tut, that's 2-to-1, which I believe it looks like I already got that set up that way. Wait, oh no, do I have it 4-to-1? Yeah, I have it 2-to-10. I have it 4-to-1 instead of 2-to-1. But you told me to do that one, so that's what the T-bond one is, at least. Yeah, I remember that. I remember that whole bit. The price ratio and the leg ratio is different. So on this one, so for instance, on the knob here, the leg ratio is just 2. So it's 2 to 1. But on this one, the tut. Oh, no, that's not what it is either. Oh, it's the price ratio is 4 instead of 2. I digress. And then I have the 5 versus the T-bond is 3 to 1. Right now I have that one as 4 to 1. So I guess we could modify that one as well. Right? So what did I say? 5 to 1 is 5 to T-bond is 3 to 1. So I will set it to that. I'll do it 3 to 1. Very good. Very good. But they're now all telling us what we want to see, right? That one is one. I love it. I love it. I can just zoom out. I mean, I can't shift my head and everything, but I think I should be fine. Look at over here. Look at how much autocorrelation there was on. Oh, come on. There we go. Look at how much autocorrelation there was in ES that moved down. And frankly, the cumulative delta on this downside. We still have 10 minutes until the open though. So is it good? We good? I think we made a measurable improvement to the stream today. Yeah. I also think I finally found an excuse to get a stream deck. I know. So the thing is my mouse is my face is over here, right? Like you can see here on the screen right now, because I haven't changed it to the other screen. My head is pointed all the way over here. But to actually see what you see on OBS, I have to look all the way over here. So like, then you have to do this. Well, sorry, I have to switch it over here first. Switch it over here. Then look. Okay. Yeah, no, I think we're good. And then I can turn the follow off so that when I'm throwing the mouse. Cool. I tell you what, though, on that whole thing about the tut being 4 to 1, it's my favorite thing about treasuries, and it's my least favorite thing about treasuries, and that is that the treasuries are like a world of their own. There are so many things to know, and there's just so many esoteric things, and I kind of think that it's on purpose. I feel like that it's done so that you're not going to pay attention or care unless you're in the industry, you know? But it sure can make things difficult sometimes. Oh, you cussed you out? Oh, jeez. Well, we did, Lucas. You don't remember that? You were here, right? Well, so if you go and you get you can go to stock. What are they freaking called? It's not stock trends. Who was the one that was giving that to us? Now I have to go search. I did. Sorry, it's Metastock. That's right. Yeah. Oh, maybe you weren't around for that. I don't know. Okay, so here's what you do, Lucas. You go to metastock.com, and they have a product there that basically gives you access to Refinitiv, which is like Reuters' version of the Bloomberg terminal, right? Yeah. and I didn't do it up for a trial. I did it for like 1 month. Yeah, metastock.com. Here, I'll go through and like bring it up and everything. Yeah, metastock.com. And then they have products, and it's Zenith. Okay. And then you can see in here. So if you just want worldwide futures data, it's like $165 a month. But they were doing, and I bet you they probably are still doing, a special where like the first month was half off or something like that. So I did the first month to see how useful it was, and I didn't find it that useful, and so I canceled it. Okay, so anyways, within Refinitiv, they have access, they give you data from TradeWeb. So what we learned is that the cash bond market is not so centralized and is currently going through a pretty significant change. So right now, there's a lot of intermediaries are the primary way that these things are traded on the secondary market and the cash market. And there's not as much of these guys directly trading with each other. And the industry is moving towards, being more like the stock market where they directly trade against each other. Okay. So there's a couple of different exchanges, and the biggest one that is run by the CME or was bought by CME is called BrokerTech. Is that right? Yeah. Oh, they have 70%. Okay, there you go. Yeah. BrokerTech has like 70% of the volume. And then there's the next biggest is TradeWeb. And in Refinitiv Zenith, they give you TradeWeb data. Okay. Now, the difference between like the yields that you're going to be quoted on TradeWeb versus BrokerTech, it's not much of a difference. Okay. So yeah, we were able to get cash market data, and here's what we learned. In the cash market, there is a spread, and the spread over there in the cash market was basically bigger than the spread plus the basis that you were getting on the micro treasury yield futures. So if you wanted to take their numbers, so you go to TradeWeb and they're going to be quoting you like 3.655, right? And then you're going to look at the micro futures and you're going to be like, well, we're 3.672. Why is that? Well, that's because there's a basis difference, right? So you have to look at what is the 1 month federal funds rate or whatever the deal is, and calculate how much of a difference how much that is over a month to determine the basis difference between the futures and the cash market, right? So first you have to do that. And then that basis can also kind of vary a little bit based on like the market volatility and everything else like that. And what we found once we did all of that math and everything was that you basically have a spread of about a basis point, which is what you see on the micro yield futures. So that's why you see that. So essentially, getting access to the cash market did not help us price the futures more accurately in a way that we could consistently make money from the micro yield futures. In news, during news, there might be some situations where nobody trades, they don't hit it, and so it doesn't follow the cash market, and you can kind of take it. But then you get all of these issues with volatility, so that one is maybe a little iffy. So long story short, having data from the cash treasury market didn't really help, at least not for the thing that we were trying to do. Would love to have Forex over-the-counter data like the interbank quotes, depths, and options. Yeah. Why do you think the standard lot on broker tech is 5 million? Well, I don't remember what it was at TradeWeb, but my recollection was that the depth was not that good. In other words, price discovery happens primarily in the futures. So like if you're trying to follow order flow, you know, particularly when you're studying the order flow, the cash bonds market doesn't help. Because the price discovery is happening primarily in the treasuries. And I found a study, somebody showed me a study that suggested the same thing for the S&P 500, that the price discovery happened primarily in the futures, and that like when you're looking at like correlations, that most of the stocks were following the S&P 500 and rather than the S&P 500 following all of the individual stocks. And so it would only, so like if you were looking at if we were trading order flow in individual stocks, what we'd want to do is we'd want to watch ES, and that stock should be following the flows in ES. And then if there's a divergence in the stock, that should only happen or would typically only happen when there is informed trading specific to that one stock. Kind of interesting, right? Cash bonds volume only comes in when derivatives and cash are in big enough disparity. The whole thing was all is all really, really interesting, right? But like what it really comes down to though is that kind of stuff is only going to, in terms of like what the cash market is doing and pricing all of the bonds and all of that, is only going to matter if you're trying to trade the basis. For what we're trying to do here in the futures, it's not really helpful, because or rather, it's not as helpful as knowing what the news is and so forth, right? That's weird. I got an email that somebody added me on Snapchat. I haven't used that application in forever. Yeah, tell me, why would you risk giving a quote which could get you on hook when you can just have more in accrued just sitting on your butt? Yeah. So where it would get interesting is when you start to get into the other bond markets, which you could potentially do as a retail trader, right? To do market making and potential price discovery in municipal and corporate bonds and stuff. Because the thing there, now you get into a very different and interesting world because there's so many of them, right? Like, you think there's lots of stocks, there's lots of bonds. There's lots of bonds. And some of these bonds, like, ain't nobody ever heard of before. So, finding a place where you might have a pricing edge, yeah, you can I mean, that's, banks do it. Banks make a lot of money doing that. And could you, as a retail trader, and a quant, potentially find an edge in there? Maybe. I think you would probably want to have a pretty big wad of cash to do that. I don't know if it'd be worth it, but that's when it gets interesting. And that's all this stuff that, we've been talking about, like the book that we have and stuff. But I don't know if we're going to get into that for a while. I think that, because I did kind of start reading that, and I was like, oh, I'll get deeper into it when I'm done with the Series 65 exam. But it sounds to me like I need to understand how trend following portfolio strategies work a little bit better first. That's probably the first thing that I need to do. So next piece of study on the docket, so that we can start our fund doing trend following effects on our fund. Well, the treasuries turned down just here just before the S&P 500 opened, I would say, quite aggressively. So it's still only 368. So $10 from that 3.7 that they were at for such a long time, an hour. And the liquidity still kind of sucks. So I think, as much as it pains me, that I probably need to sit on my hands, unless I'm really like 368 and put a bid out and they fill me. Anyways, so I didn't really go into it, but Kyle's saying like having the Forex OTC data. So I don't know what over-the-counter kind of data looks like at all, but I do think that having better insight into what's going on in the Forex market could be a really significant edge, you know, especially if it's like it's OTC data and you could see who it is. That might tell you a lot. Because my understanding is that, like, from an institutional perspective, that like the Forex traders have the hardest job in some respects, because you really don't have a whole lot to go on, and stuff can happen so quickly. Okay, so I am seeing a little bit of a shift in the order book now here in the 10-year, but I think that the pressure is still to the downside. The spread did come in a little bit there. I don't think that you ever would have gotten filled at 3.68, but there has been a decent number of orders here in the micros in this area. They're giving you 3685. I think I could probably take 3685 and get a little bit of favorable excursion. I don't know if I would get like 20-30 bucks, which is what I feel like I would want to get if I was going to do something here. Am I being too picky? Well, I should be picky here week before Christmas. I just want the depth and volume. I don't need ID because it's institutional market. You know, if there's big volume there, it's not retail stops. Well, okay, so the reason why I say I'd be more interested in who it is like, is it JP Morgan or is it the Sovereign Wealth Fund of Japan, right? Most interbank deals happen on the phone. I don't think a depth even exists there. Well, yeah, that's what I was saying. I don't know what data that you'd get provided. I don't think that you would have a depth, right? But you would be able to see like the transactions after the fact, though, wouldn't you? To be able to see JP Morgan traded this many X with this guy, and you know. Imagine you having an ES DOM that filtered out retail volume and only. No, I don't think that would be useful, to be honest with you. It is. It's like so we need to go back. So I feel like that sometimes I assume that we're like all on the same page, which I think for the most part we are, but there are some beginners that might not. And I think that when we're trying to make an argument here about this sort of a thing, like it's really useful to like lay all of the base framework, right? So we have to go back to the question of is the market efficient? And traditionally there's been this idea of like there's strong form and weak form efficient market hypothesis. So the strong form efficient market hypothesis isn't really taken very seriously because it's just demonstrably and observably false, that the market prices in all available information, including private insider information. Okay. And in this world, you'd only be able to make money from like investing in index funds or something like that, if you'd be able to make money at all. But, you know, there are people like Renaissance Capital came out, so nobody takes the strong form efficient market hypothesis seriously anymore, right? So then you get into the medium and weak form efficient market hypothesis. And this is where they kind of say that like on a weak form, they say that the market takes into account all past prices, but not necessarily like insider information and things like that. And so you can still get effects like trend following or momentum effects, rather. Right? So the reality is that the market efficiency is a little bit more complicated than that, and the whole weak form, strong form framework doesn't really make sense anymore. So really what it comes down to is very specific things. Is the market efficient or not efficient at that thing? So when we're talking about like what are tendencies in people or cycles in the market is very, very efficient against those things. Why? Because orders have strong impact. So anytime that you find any kind of statistical inefficiency and you trade on it, it's very, very easy to remove that from the market. Okay. Now there's another level, and that is inefficiencies that are created by the structure of the market itself. For instance, the things that we see in the book. Okay. There are some behaviors about the order flow that are very consistent, and they happen because of the very structure, like the very rules of the game. Okay. So in those instances, those inefficiencies will always exist. There will be competition for those inefficiencies. So it's going to be really difficult for you as a retail trader to make money solely off of that thing. Okay. But it will always exist, and you certainly don't want to trade against it. Okay. So that might not provide you an edge over the overall market, but it is stuff that you want to factor in to like when you're executing. Okay. And so that's going to be stuff like the momentum effects, volatility, the order book, and risk management. Okay. So those are all these kind of like this base layer of things that you want to look at, right? And then there are the informational inefficiencies. And because orders can move the market so strongly, if you were to had a way to perfectly, get a perfect price, you're going to find that the market is just never at that perfect price because the orders move it away from that price, and it can move it away from that price for long, like years. Okay. So the market is not very informationally efficient. Okay. So why do we look at the book? We look at the book because there are proven stylized behaviors that are caused by the structure of the market itself. So even if we can't make money solely from trading those things because we're not fast enough, it's still information that helps us optimize our entries and exits, right? And because it's caused by like the structure of the market itself, it's the combination of all of the things. So when I come in here and I look at only the institutional orders, the institutional orders aren't going to tell me much about how the market is going to behave based on the book, because it's really everything combined together that causes that behavior, right? I might be able to sniff out the institutional orders to get some sort of sign that there is informed trading out there that's trying to be super sneaky, right? But if they knew that I was able to see that stuff, then they would modify their strategy and make it so that we can't see it that way, right? So it probably wouldn't be useful, right? Now, if I was able to see the name of every buyer and seller in a market, then I could do that sort of a thing, right? That would change the rules of the game. And that is probably one of the most significant factors behind how a trading floor market, an open outcry market behaves compared to an electronic market, is that on an open outcry floor, the traders know each other and they can kind of see who it is coming into the market and doing something. Yeah. But to the point, the thing that you should be able to get is like, yeah, there you go. You just want the actual data for Euro USD instead of the CFD quotes. That's easy. Get Clearport access from CME. That's where it's reported for every Euro USD trade that goes through in the US. Yes. Like in particular, the volume that's coming through. It would be useful information. Because then we would be able to do some of the kind of market microstructure analysis that we do here in the futures. Although I think that because it's an over-the-counter market and everything, you know, we would probably have to discover different market microstructure stuff. I don't know if there's studies on that. I've never read studies on that. The stylized behaviors of currency markets. That's what I want. Oh, what I really want. Nice quant web pages you dared. Yes, are you talking about that link that I posted from Dirty Quant? that guy is a really good guy to follow on TikTok. I think he has a YouTube channel now too, but he's starting to get very successful. It's really funny that like when you're on social media, it doesn't happen very often, but when you come across somebody that's been in the industry and actually knows what they're talking about, it's like it's so obvious. Like, I don't think that retail traders really understand how much they stand out. And like the issue, so can I rant for a little bit? Let's see if I can find this. Here we go. So on Reddit, somebody came in here and made this post that's doing pretty well on there that says the state of this sub ... facepalm facepalm facepalm. And then this person comes in and says, okay, like let's say I had $100,000 account and I want to make $600 a day. And is that reasonable to assume that that's possible to achieve? Then they say, well, in theory, yes, but doing it in the real world, no, you're probably not going to make $600 every single day. And then the person says, well, I've proven it to be profitable, so I'm gonna stick to that and just want to hear something from someone and not a lot of people want to talk with unless I post all my gains, which I'm not going to do, but thanks anyways. And then the guy's like, okay, sounds like you got it all figured out already. Good luck. That is freaking Reddit for you. It's not just Reddit. It's the whole retail trading community, man. Is you'll have somebody that come in and they'll say something, you'll prove to them that it doesn't work that way, and then they say, well, I think I know better anyways. It's like I came in here asking you for advice because you're more experienced and I don't know shit what I'm talking about, but I don't like the advice that you gave me, so I'm just going to ignore you. Yep, they're just hunting for confirmation bias. But like the thing is he said this, the absolute state of this sub, it absolutely is. Is like nobody is coming on there to like actually learn the real stuff about the markets, because when you give them the real stuff about the markets, you get shit back. It's like they don't care, they're not interested in it, they don't believe you, they try and come up with every kind of little weird scenario you can possibly think of that might falsify what you just said or whatever the deal is. That they're just not interested in understanding the market as it is. Like that's the first thing if you want to trade. Okay, the first thing if you want to have success in trading is you need to understand the market as it is, as well as we understand it or have proven so far. Okay, you understand that first, and then use that information to determine how you're going to go about your edge, right? So everything that we know about the efficiency of markets, when you put all of that together, it explains why the industry functions the way that it does, right? If you want to make money, there's two ways to make money. One way to make money is the high frequency trading route. Take advantage of the structural inefficiencies in the market. And there's a lot of competition, but if you're fast enough, you can make a ton of money doing that. And those are like some of the most profitable strategies, right? And then the other side of it is the informational inefficiency. The way that these quant funds work is they look at all of the available fundamental data that they possibly can and try to identify price inefficiencies in the market, and then they use the structural information that we talked about to refine their entries. And that's how they do it. And this is how essentially the market works. And it's just only been in the last few years that we've been able to create a framework of understanding of both the market microstructure and the efficiency of markets to explain why the industry functions that way. Yeah. Every single chat room I visit escapes the 95%. It really is. Nobody comes out and posts on social media. Like, here's the issue. Here's the first thing. And this is why our stream functions the way that it does, is that people are more interested in the social praise from people than they are actually having success in trading. Right? Like to these guys, having the success in trading doesn't mean a thing unless they can go and tell everybody on Reddit and they all go, ooh, how did you do it? And you can say, well, I'm not going to tell you. Right? That's all that matters to them. And so what happens? The instant that they have any kind of gains, they go in and they post it. Right? And the chances are that it was probably just random. They were probably just lucky. Right? But then, like, the thing that's so frustrating about it is they don't listen. So if you, here's the thing, is like, if you're an institutional trader that really knows what you're talking about, and I mean like somebody that, you know, is able to do this for a living and is like the top in their field in quantitative finance or market microstructure, these kinds of guys, right? Why would they go on Reddit and talk to you if that's the way that you're going to behave? They're not. Like, they're not really allowed to post on social media anyways. Why would you go through all of the effort and risk involved in getting in trouble at your job when all you're going to get is this stupidity back from the retail traders? There's no incentive to it, right? Which is why what we have to do is we have to create a community here that is based on empirical data, right? I don't give a shit if you went and you went long and you made $100,000 or whatever on some YOLO. I don't care. All I care about is, can you prove to me a behavior about the market? If you can prove something with a large data set, something that you could, maybe it's not in a study, maybe you can point to a study, but if it's not in a study, you could write a study, but it's something that you discovered and you don't necessarily want out there. Okay. You can prove that, then I'm interested. Otherwise, I don't give a shit. And I don't even give a shit if it was like, we were talking about, okay, well, if you made profits, like, first, let's, make profits over a 5-year period and everything else like that. To me, even if you made money over that 5-year time period, I can come in and I can say, okay, yeah, maybe what you're doing is working. Yeah. But unless you can prove to me the stylized behavior of markets and that's causing that, it's no use to me. And that's why we've based our community the way that it has. So I'm trying to teach you. I don't know everything. So the things that we're trying to learn and the things that I teach are things that is like real empirical data, like stuff that people in the industry look at. The stuff that the retail traders ignore because it doesn't give them clout. So we would want the stream to become more successful, yes. But on some degree, we also kind of have to revel in being unpopular because That's just the way that people are. And as long as we're giving good information, we should be proud of what we're doing here. Yep. 90% of these traders won't be around in a year or two and will either blow their account or get bored and move on. You survive and stay around. Yeah, one of the things that I was seeing yesterday, and it was the reason why, did I put this one? I put it on YouTube. I did put it on YouTube. I made that short that was like, this is the most common mistake that retail traders make. The reason why I made that one is because I'm noticing a lot of people coming in and they're like, so like there was one guy that I really liked that was really trying and working hard and was on Discord and everything. And he decided to have a position on going into that insane CPI that was a bad position. I don't remember who it was, but it was a bad position and they lost big time. And I haven't seen him since. So like what happens to a lot of people is they have their one WOD, and then when they blow their one WOD, like they're done. That's it. And that's kind of a big problem because number one, he made a mistake that was very avoidable, right? Which was like he didn't know enough about that piece of news to know that there was really no point in trying to have a position on going ahead of it, because it was going to be like it was either going to make or break your account. You didn't realize that. Okay, so and because he made that mistake, like that's the end. I haven't seen him since. Maybe he's still around, but I haven't seen him since. And everybody tells you things that kind of lead retail traders into that, to not pay attention to the news and not know that stuff. It's just so frustrating, right? But then the other side of it is that like you're probably going to make that mistake like many times. So it really behooves you, especially I would say the first 5 years of your trading journey, to really minimize the amount of risk that you're taking. To really minimize the amount of risk that you're taking so that you can make mistakes and big mistakes and keep going. And so I wouldn't just come in, and I think that the retail trader approach is I need a certain amount of money to trade with, and I'm going to save up that amount of money, and then I'm going to start trading. And then when they lose that amount of money, they're done. You can't do it that way. You need to come in and say, okay, this is appropriate risk for me to take, and I'm going to use this source of income to continually fund my account while I'm learning. And I'm going to take as little risk as possible, as is necessary for me to learn, so that I can trade for as long as I need to. And then once I've gotten to the point where I really understand and can prove how the market behaves, and I have pretty confident through my trading over a long time period that I really have a genuine edge in there, and then you start taking on the risk and you start trying to make the big bucks, right? Break your WOD into smaller WODs, yeah. But like for instance, I come in here and I trade micro treasury yield futures, and I'm only risking like $10 at a time, right? I could come in with the size of my account and I could probably trade like 20 contracts, right? But I don't do that, because I want to take as little risk as possible. So I think there's still some rough edges in how we trade. And it's not, I think those rough edges is not our understanding of the market. I think that we have a really good advanced understanding of the market now. Where those rough edges are is times and situations where I'm just not in the know, right? It's really hard. It's a really hard thing. So that means I've got to keep my risk minimal, and I need to be very selective about when I trade, and that's what I do. And that's how we've been able to, we've done much better this year than years past. I don't know how it comes out to, because there was that other account, and there's all these other complexities about it. But on this account, trading micro treasury yield futures, we've made money. It's been good. Oh man, so I just shifted my eyes around. I'm like kind of looking at things all over again. Well, let's take a quick look at the markets again here. All right. one ZT won't hurt. I probably could do one ZT, yeah. Okay, so if we come over here to our treasury, so here's the 30-year treasury. We can see there's been a significant shift in the volume in the 30-year. There's also been a significant shift in the volume in the 5-year. Okay, up, but not quite so much in the treasury, and so that kind of just leads us back to this spot that we've been here for quite some time. When you look at the spreads, though, the spreads are all flattening. Turning over to the S&P 500 here, we have, I mean, they're just getting crushed. And when we look at the autocorrelation in the market, pretty good autocorrelation in the market. When we look at the overall market activity, I'd say it's pretty healthy. There's definitely opportunity there. Alice is one of our custom indicators that kind of gives us a signal about how much opportunity is out there. We're in the 20,000s. That's pretty good. And yeah, just want to remind people you can get these indicators at speculatorseth.com. The spread is absolutely essential. The other one is the dollar. Here you can see here on the dollar has just been rising all morning. We are in a little bit of a pullback, but we're almost to 104 now. So pretty big shift there in the dollar market. So dollar is another indicator that we have on the indicator package at speculatorseth.com. I knew a trader that hated micros. He used to say, guess who trades micros? Losing traders while getting living well. Yeah, I think, you know, if you're not making money, micros would be a great place to go and play, yeah. That's what they said when they traded minis, when minis were introduced as well. Well, the minis is kind of an interesting thing because since the minis have been introduced, the S&P has moved up so much, and the volatility in a tick basis is so much higher that now trading the E-minis is almost like what trading the micros is almost like what the E-minis were before, and kind of like what the E-minis were to the full one. They don't even trade the full one anymore, which is kind of funny. But yeah, I mean, there's a large audience for it because the fact of the matter is that most traders are not profitable. And like the thing is that it is a problem for the market. I don't think we always realize, but you know, like I think that the micros here are a really good example of, like, remember we were talking earlier in the stream that we did all of this research about what's going on in the cash market, and we found that the information from the cash market did not give us a more accurate interest rate. In fact, when the micros here have like really good liquidity, this is a better rate to go off of and kind of base things off of. So the retail traders here in the micro yield futures are actually providing the market with a quotation for yields that is useful for the rest of the market, right? So having more people trading micro yield futures to get an even more accurate yield price would be beneficial to the market overall. And it's kind of like that in all of these markets, is that the high frequency trading people have such a big advantage that the people that we need to come into the market to be able to reduce some of the informational inefficiency and some of these other problems that we have with volatility and liquidity and things that happen during crises and stuff like that. We need more people in the market for it, but we can't keep them around. We can't keep them around, for various reasons. Half of them are going to lose anyways, and then they all insist on doing stupid shit. like I used to say, there's a reason why most retail traders lose. Okay, the majority of traders have to lose by the very nature of the way that the game works is 60% of people are going to lose money. Okay, that's just the way that the market is. Okay. And then, you know, there's kind of all of these other things like the spread and everything that works against you that kind of brings things to the point where like most traders are going to lose, and it's probably going to be like 70 to 80% of traders, right? But like it's 80, 90, 95%. And I've just come to the conclusion that the reason that is because most people are just fucking stupid. Like there's just no other way to put it. Is that the majority of people insist on going down a path in trading that leads to nowhere. And you can lay out that path and put all of these big flashing red signs that are like, this is what is actually gives you a fighting chance at being able to be successful with this. I can't guarantee success. 60% of people still have to lose, but you can actually be competitive. They ignore it. They're like, no, I want to go down this spooky road over here with the scary trees called technical analysis. That one looks more interesting. Okay. Makes it easier for us, I guess, but the logic is they want to lose as little as possible, so that's why they trade micros. If you have an edge, you want to get paid. Well, okay, so like the thing is that if you were a high frequency trader and you had a measurable edge in your high frequency trading, then yes, you would want to size up as much as possible. Absolutely. Okay. But if your edge is discretionary, there's going to be a certain amount of variability in your results. And the thing that I'm kind of trying to say is that the amount of variability, even in a successful strategy for a discretionary, informationally based strategy, or basically anything that any retail trader is going to do, is quite a lot. And I don't think that people realize how much it is. And I really think that if you're trying to like figure it out, especially, and you haven't even been trading 5 years, you really should be just trying to trade as small as possible, because at least in the futures, because the reality is in the futures is that you're just really, really highly leveraged, right? And you don't get to a point where I feel like you could really comfortably like take size on in these markets and you know, last through the difficult times that you will inevitably have still doing that, unless you had like a $50,000 account. I think 50,000 to me is like that level where I would feel comfortable doing these kind of risky market making strategy things that I often do in sim here. I've had a lot of success with it. Like it seems like there's some edge to it, right? Seems like when you look at over the year and you look at the trading results of that, it looks really, really good. Actually, let's try and go and look at that. Can calculate your leverage on the notional put of cash accordingly instead of going in. Okay. To me, it's like in Zien, it's like $10,000 a contract. That maybe that's like way too high of a standard, but okay. So I'm gonna come in here. I'm gonna do stats from the beginning of the year, I think. And I'm going to do only Zien. Might not be. Oh, okay. Yeah, no, it's good. I'm gonna pull this out here. I was gonna say there was some trades that were like really awful, but I think that those ones were in ES. They kind of screw up all of the larger stats. So according to this, with the quote unquote market making strategy, made 15,000. It's not completely factoring in commissions though. So what's 15 divided by 50? I need a better calculator over here. I need to keep my calculator. Maybe once we get a new desk, we'll be able to do that. 30% on the year doing this. That's pretty good, right? So from your logic, I should be trying to trade as big as I can now, right? But the issue is that, like, look, there was like a $10,000 drawdown. Like, it's very risky. Very risky. But let's see what were our stats like. The stats might kind of I would think that the stats would kind of belie some of the problems with this strategy. 66% win rate. MFE higher than MAE. Good profit factor. These are just really good stats. I don't know what to tell you. They're really good stats. So in these individual ones, I don't know if... Okay, wait. Max drawdown is 6,000. Okay, so a max drawdown of 6, let's call it 7,000. This is 6.5, but a drawdown of 7,000 when you had a total profit of 15,000, that is not a very good Sharpe ratio, is it? So the Sharpe ratio kind of hints at what I'm doing here, right? I'm combining informed trading with really strong risk taking, right? And most people, especially when we're looking at like ninja trader strategies and stuff like that, most people, you'll see it as like, oh, well, if you have a winning trade percentage of over 50%, then your losers are probably bigger than your winners. But actually, when we look at it, my largest winning trade is definitely a lot bigger than my largest losing trade. Oh, actually, I take it back. My average winning trade is smaller than my average losing trade. There you go. So we would need to fix that. I don't know if there's a way to fix it. It's endemic to the strategy. That's why I don't do it. But if I was a quant firm, then maybe I could do it. Maybe I could apply some other things. I'm hoping what I can do is I can kind of utilize that stuff, but I'm doing a CTA thing. You know what I mean? Like I'm doing a CTA momentum strategy and I'm managing a fund from that. And then I kind of place the market making on top of that as just kind of like a little sweetener. Maybe. Seth Martingale's hands pro. Yeah. Well, with that one, I think part of the problem is that like the losers that I had. Oh, I closed it. I'm so dumb. Oh well. The losers I had were really bad, right? So this is where I'm saying, like, I obviously want a much larger wad of cash, but I also think that we still need we need adjustments here and there, right? There are times where Seth's not paying attention or is not in the know and he gets blindsided, and we got to fix those, right? And the issue on that side is I'm not sure there's a whole lot we can do about that one, except for just continue to trade and learn every day from what actually happens. Don't know if there's a whole lot of academic or statistical information that can help us on that one. Man, so how are we doing here on the S&P 500 relative to like days past? Because this is starting to look pretty ugly. Okay, so it is definitely a breach of yesterday's lows. You'd still have a long way to go before you're beating out like the weekly lows. But yes, this is a pretty ugly move in the S&P 500. I think driven primarily by the strengthening dollar. Because you notice here in the treasuries, yields aren't changing a lot. The yields aren't changing a whole lot in the treasuries. They are getting less. And then the S&P 500 is just like absolutely puking. And why is the S&P 500 puking and the dollar rising? Because they think GDP is too high and that's bad. Right? So that kind of suggests to me that this selling in here has a little bit more to do with speculation and market positioning and so forth than it does the fundamentals behind the basis of the trade that they're making, because otherwise the yields would be moving a lot more and we wouldn't have bounced back so hard either. Anyways, minimize your risk, guys. Don't be the guy that, you know, you only get $5,000 to trade and then you blow it in your first 6 months and then you can't trade anymore. Right? $5,000 that can last you 5 years if you do it right. You know, give yourself like $1,000 a year. You lose $1,000, you're back to sim. But as things go along, if you're trading minimum size and so on and so forth, you should be able to, you know, $1,000 on micros, you should be able to last you multiple years, even with the information that I'm giving you, at least. So, and if you have a high frequency trade you think we can pull off, I guess we can do that too. I think at some point in the distant future, we're going to have to return back to HFT stuff, right? I think that I want to know a lot more about these machine learning strategies and kind of factor in some of that stuff first, and then maybe I could take a swipe at some high frequency trading. Just checking Twitter here, seeing if there's anything I missed. Jim Uriel liked my tweets. I like Jim. He's a nice guy. He's well, I mean, I guess I like him. Probably I like him because he has similar political beliefs, but so we still got about 40, like what, 30 minutes left. So given the discussions that we had about like ways to improve the stream and everything else, I think that we did do things a little bit differently here today. How do you guys feel about it? Because I'm kind of feeling kind of good about it right now. I know if that's me or the ADHD medications. I always tend to feel a little bit positive in the mornings. I'm definitely like not too high on the medication, but to me it's like there's always kind of like that little bit of like the baseline is kind of a little bit of slump anyways, so when I'm taken to like normal, it feels super positive to me. So that sucks. I tell you what, I don't think that we as a society really understand. I don't think that the people that have it, like myself, really understand how difficult of a thing ADHD is. So ADHD person feels emotions more strongly than another person, like going through a traumatic event or having a traumatic relationship, that sort of a thing. I don't think that people realize like how absolutely traumatic it is for people, right? Or like it's coming here and trading and losing my, like, look at my face, man. Like, come in here, look at my chin. I'm only what, 37 this year? I'm only 37 this year, and I've got like a huge gray patch on my chin now. Okay? That's not genetic. Okay? Nobody else in my family has that. That's effing stress. That's a combination of the stress at working from a bank, and then the stress of getting divorced, and then the stress of having a bunch of stepkids and a ADHD child myself, and then on top of all of that, day trading every day. That's what causes that right there. But I digress. I feel better about the way that we've run the stream today. I feel like that it's a step in the right direction. And I think that it does address the things that we talked about yesterday. You're a robot, but still sick. Thanks. I think one of the best things that I got going for me in life is that at the age of 37, I'm still very active. You know, I've been doing weightlifting, and I anticipate. I mean, I have a lot of health problems. I really do, but I think that I'm gonna be walking around and fine in that respect till the day I die. I think that I've had a lot of healthy habits, and day trading really helps because, like, honestly, day trading, you really do have to be your best, and so you got to be working out and you got to be eating right and all these things. I think though, I think that one of the things that we're doing is, like, we're talking about the things that we shifted the way that we ran the stream, and I kind of added that Zoom thing, so that really helps in terms of helping new people understand what's going on, help people understand the importance of the indicators that we have, and the overall approach to the markets and how the markets are. So I think that all helps on that side. I think the thing that's missing is your average person's not going to be interested in that, right? So I think the thing that's missing is how we make the stream more entertaining. Yeah. How do we make the stream more entertaining? And the other thing that I think is missing is how do we help further develop the community? So I think that on that side, so I haven't discussed that yet, but so we go into that now. I think that what we need to do is we need to give better ways for you guys to contribute. So I think what I need to do, strippers in the background, and oh dude, that's exactly what I need, man. We just oh, you were gone, Lucas? I didn't. Oh, so let me start over again then. I was asking, so we've changed things a little bit on the stream, and I think that has helped people see what our indicators are and why that might be useful, our overall approach to the market, and I think that's been a good change. Okay, and we are recording this, so we could take any of this stuff and we could go and turn it into videos, although I don't know if we've have anything today that would be like super entertaining or it would make a good video, but we have it if we want to. Okay, so the question number one was, how do we feel about the changes that we made today, if they were good, or how we would modify those? And then number two thing is then we have to come into the next set of things, which is how do we make the stream more entertaining and help the community out, right? I don't know about, so I think that Ann Steffa has a great idea here. We need, I mean, I don't think that we need strippers, but what we need is somebody really good looking and, you know, to just be, well, we would give them a real serious job, but, you know, somebody that's a little bit more interesting than me, huh? We'll put it that way, right? That would make the stream more interesting. I think that we would need more money for that. But if I come across anybody that's willing to just do it for tips and like sharing the profits of the stream, I'll definitely keep an eye out. Okay, so if you know any strippers in the Salt Lake City area that wants to, you know, join the channel and share in the very little money that we do make from the channel, let me know. I know. Here's what we can do. Here's what we can do. We can make an anime girl newscaster VTuber sort of thing. Have you seen that, where like there's these VTubers and they can make like these 2D girls, like anime girls, and they can do stuff, and we can make an anime girl that's like a news reporter. What do you think? We'll do it. Put out on Craigslist. can make the reporter. I don't think that my wife would like to be on stream, to be honest with you. She won't put all of the effort into doing that, and she has some health problems, and she's a little conscious about it. Even though she's she's very good looking. She has very, very good genetics. It's unfortunate that she got the thyroid issues. But we could make a VTuber person who could do that. That would be cool. And I don't know if that would actually do it. Would probably need. I do kind of feel like, oh man, it's you know what, I don't know if this is actually true or if this is just Seth's own insecurities, but I kind of feel like to make the stream more entertaining you need more than Seth, you know what I mean? I don't know, that's not entirely true. I've certainly had my moments where we had fun, haven't we? Yeah, we have. This playlist is sick. It really is. You know, this is Stream Beats by Harris Heller. You can go to streambeats.com and they have a bunch of different ones, but they made this one for 100 Thieves, and it really is the best. It really is their best playlist, and I really like it because it's broken beats, it's hype, it's still got the EDM flavor. I like it. I would like to see they should make a playlist that is more what is the word that they call it? Anyways, it's just this new style that's, you know, they have a couple of tracks that are like that on here, but I like to see a whole playlist of that stuff. Okay, so anyways, the community bit, that's the part that I think we could make more improvements on here. And the thing that I think we need to do for the community is I think that you guys should get paid for contributing. That's what I think. I don't know how to implement this from a practical perspective. There are some things for Discord where like you can like you know, when people say something, you can react to it and that gives them points towards things, right? And then we could give goodies for points, you know, for people being top contributors. On YouTube, I think we would probably have to write our own bot, right? But I would think that we'd need to have some way. I wish, you know what? I wish that YouTube's chat was better. Like, I wish that when somebody comments that I could react to individual people's comments like you can on Discord, and that I could, like, you know, if somebody makes a comment or asks a question, everybody could vote on it so that it'd be more likely to be answered and that sort of a thing. And then I could do things where it's like, okay, when Akshay comes in and tells us something, which, you know, he's given us good information today, right? We can give him points for it. No, it's for all of you, because I think that, like, there's two sides of it. Is that, like, there's you guys, like right now, Akshay contributes a lot, Lucas contributes a lot, NASDAQ Killer does contribute a lot, although it's kind of more on the entertainment side. Right? So there are some of you guys that just contribute anyways, right? But there are other people that come in and they contributed, or they kind of proved to us that they could contribute, but, you know, there's not enough of an incentive for them to come in and be like super dedicated every day, right? And like the bigger thing here is I think it's more on the Discord side. I think I probably care more about this on the Discord side than I do on the streaming side. But I think that the community aspect is really, really important. We want to have a solid community that's based on empirical data, that is sharing information that is actionable and valuable, and and grows, because really when it's easier to take us out when we're trading on our own. Okay. Of course there's like a problem if we became like too big, obviously, right? But there's things that we can do about that. We don't have to worry about that. We can cross that bridge when we come to it. So really what we need to do is we need to make sure that when people do contribute to the channel, that it's as fun and rewarding as possible, right? Because right now I feel like, especially on Discord, that it's just kind of like, well, if you like chatting, you can do that. And some of the people that like chatting the most on Discord aren't necessarily giving you a lot of useful stuff, you know? So we do want to give everybody reasons to be like, okay, what is the most useful information, right? This was useful to me. I upvote it. They get, they get points for it. And then at some point, once we have that system is developed enough and we understand how it works well enough, because I wouldn't want it to be like the same person every month gets the prizes or whatever, but we could have some sort of profit sharing system for it, right? I would love to have something that's like, we're running a fund together, and there's the management fee, and that management fee gets shared across the community. That would be so effing cool. You hate recognition? Yeah, but that's what I'm getting at is like, I could come in and give you like the social recognition, right? But I think that what really matters is like, it's being rewarded for performance, right? Like you have skin in the game, right? It's kind of like a question of like, how do you help? How do you make it so that people have skin in the game when it comes to chat, right? Right now, nobody really actually has skin in the game. Anybody can just say whatever the hell they want, and if you say something that's useful, then it's just like, oh well, we really appreciate it, and you're just doing it out of the goodness of your heart, right? But what would be better is if there was a way to make it so that you had skin in the game, so that if you make useful comments, you benefit from it, and so on and so forth. And I do agree that like the social praise is probably not a good enough incentive or reward to create that effect. So it would be better for like money. You only do it for the laughs? Okay. Well, that's good. That means that at least Akshay finds it entertaining enough. Oh man. Maybe if we make a, an anime girl persona on the stream, it can be a robot. It can be a robot that tells us stuff. Yeah. But then we come back to some of the more difficult decisions if we really go down that route. Am I going to go down a stupid? I think that what's going to happen is I'm going to go down a stupid rabbit hole today and find all of the software and stuff to make like an anime avatar, right? And then like forget about it and never do anything with it. That's the typical way that Seth would do things, right? But you have to make all of these decisions, like what hair colors would they have and stuff, right? So I'm partial to red. Are you guys down with red hair? And then if we're gonna start a fund, what do we name the fund? I still don't have any good ideas for what we would name the fund. Some idiot on the internet capital. That's What the heck? So somebody was predicting, when was this? On December 14th, someone predicted that the S&P 500 would be 4350 by the end of December. Yeah, I don't think that one's going to happen. Oh, man. Okay, I'm going down the rabbit hole. You guys didn't say anything. You just wear a huge fake gold chain with shades on. Okay, do it. Do it. Oh, here it is. I need a gold chain. And a popped collar. Okay. I think that my collared shirts are in the wash. I really only have one collared shirt that I think I could really like pop really well, you know. You think that people will be more interested with the hat and everything? We could kind of have it to the side. Maybe this side. Maybe this side. There you go. Wait. Animated girls should have the most obnoxious hair colors only. Something like cyan. I could go for cyan, but it wouldn't be, you know, I would make it more like an orange red. Okay, wait. Let's look at the tools that we got. I can't wear the headphones with the hat. Scumbag Steve in real life, I know, right? You know what the problem was with Scumbag Steve? Was the accent wasn't very good. And it was too realistic. It was like that's what everybody on social media was doing. They couldn't tell that he was a parody. Maybe we need to bring him back now that we're like in a market downturn and everything. No, man. Because here's what disappoints me about Scumbag Stock Market Steve, rather. I thought it was fucking hilarious. Like every time I made those TikToks, I go back and watch it, and I was so into it, and TikTok, it never took off on TikTok. I don't know if people actually found it funny, but I really enjoyed it. Okay, want to become an anonymous celebrity on YouTube, Twitch, or Facebook? You can use these awesome VTuber software tools that celebrity VTubers use. What is VTubing? Okay, I know what that is. Blah, blah, blah. Where's the goods? Traditional live streaming on YouTube or Twitch is all about personality. The content you are offering also matters. However, the subscribers and daily active viewers mostly look for a personality they can relate to, what they want to become, or the body language they like. Oh. Wait. So I have to have a personality that people can relate to? I am so fucked. That is not going to work. No, that's what we need to. Maybe I shouldn't be on the stream at all. Like it's not Speculator Seth's channel anymore, and we create this anime girl persona that people can relate to, or what they want to become. I don't know if that one makes sense, but can you? I can see just fine with the shades on. I can't. Well, maybe I can, but if I did this, and then now I can hear. Now we're good. Oh, that's so much better. I can hear the music. Is that what you guys want to become? Is some guy with gold chains? You know what I need? Is I need a... Oh my gosh, what was it? What was it called? Hold on a second. Osmium, that's right. So osmium, I had never heard of it before, but osmium is like the most dense element. Like the weight per volume ratio is the highest for osmium, but it's also one of the most rare elements. Like, it's very difficult to come by in the earth, and it is so there's not a whole lot of stuff out there to work with and to make things and everything. But these guys over here, they make these little cubes of osmium, right? And let's see here. I think so. If what do we got? Empty labeled 14 millimeter box, metal cube. So let's just go to the 10 nanometer cube, right? Add to cart. Okay, look at that. Literally 10 mil. That's like this. That's like a cube that's like this small. It's $1,000. Osmium. Isn't that effing cool? Isn't that effing cool? There's this other one. I forget which metal it was, but it's was it like magnesium or something like that? That's also really, really heavy. And you can get like a big cube. And it's like really, really hard to destroy. These guys on YouTube, they made this whole series where they tried to cut the cube in half and they couldn't do it. They tried all these crazy things to do it. Yeah, I need some of those so I could show people, oh, look, you want to be rich and have an osmium cube like me. Missing the red bandana. Red bandana. You know what my favorite part of this one was that people said that they needed to be white rimmed sunglasses. I thought that was hilarious. White rimmed sunglasses. So I should only view a 6'8" Giga Chad with 12-pack abs who looked. Oh man. Okay. So anyways, back to the VTuber stuff. Usage of technology, blah 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 blah. Okay, the software. Where's the software? Pre-built models, templates, characters, blah blah blah. Live 3D. Maker, editor, gallery, extension, VC face. I wanted a 2D puppet. What did you think? Oh, we could do a 3D puppet too. V-skin. Did I hear you say the S&P? Well, I was talking about next week, right? Would we say that today is very volatile? I think 70 points down is pretty bad, isn't it? I have to say, I am quite taken back by the amount of downside action that we're seeing here in the S&P 500. I think I understand it. But the thing that is like really weirding me out about it is that like the treasuries have like barely moved. In fact, it kind of looks to me like the treasuries moved down initially off of that GDP news, and then they kind of turned around and they said, no, this is too bad. Like they're gonna have to lower interest rates. Like we're gonna go into a recession. Yada 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 yada. Right? It's just 1.8%, is it? No, it's not that bad, is it? Okay, so the NASDAQ is down almost 3%. Yeah, you're right. It's a big move. It's a big move. You're right. It's a big move. I would still say, the most accurate way of putting the thing that I don't like about the market, about trading this market, is lower liquidity. Okay, there's just going to be like overall less reliable liquidity. So I'm not just talking about like the resting orders, but also like how much does the resting orders reflect what actually trades? And what you're going to find is that they can just like all of the orders pull and they can just move and it just jumps real quick, right? So this can be really, really hard to trade. Now, today was probably the best day out of the whole week to expect anything because we had the GDP, PCE, jobless claims, right? So that's probably why we're getting the volatility that we're getting. But again, like I'm just seeing here, like the treasuries sold off initially and then bought back up because it's like recession fears. Well, kind of is weird that the S&P 500 has just been to the downside and won't stop. There could be some other things involved, like end of year tax selling, etc., etc. So you know what? I really don't like this because the sunglasses are pushing into my ears and the side of my head, and it hurts. Don't like it. Oh man. They're taking the sunglasses off and now everything's so bright. Oh jeez. So this one, V skin, that looks more like what I'm expecting. V roid. VR chat, YouTube studio. Wow, there are a lot of choices. But they said that the best one was Live 3D. So let's look that one up. Oh, hold on. And we get a video. They have a video of this. Okay, so they're like 3D characters, but I think we could work with that. News is good. No, I wouldn't say that the news is good. Well, okay, sorry. It's I guess it is kind of a bad news, or sorry, good news is bad sort of a thing, right? GDP, final GDP was better than expected. Let's go back here. Hold on. You ask, this is an important question, so we'll cover that first, right? So the numbers that we got were initial. Oh my gosh, what the hell? Okay, initial jobless claims was slightly under expectation, so that's good. And US GDP quarter over quarter final, that's good. Or rather, that means that the economy is strong. And then the PCE prices was slightly higher than expected. That's good. That means inflation slightly higher than anticipated. I don't know if that one's a huge deal. Okay. I don't know if that one's a huge deal. Okay. Then later on, we had leading index and stuff like that. I wasn't even paying attention to that. Kansas City Fed manufacturing, that one will be interesting at the top of the hour. Okay. So overall, it was saying the economy was stronger than anticipated. But overall, that's bad for the Treasury and stock market because that means that the Federal Reserve will continue to keep interest rates high, and that's going to be bad for stocks. Now, the issue that we have in this situation is that the Treasuries think that they've completely priced in what the Federal Reserve is about to do. They think that they've priced it in. So they're not really moving very much, but then the equities are like just like knee-jerk reacting to it, even though the interest rates aren't moving, and they're saying, oh, this is an awful, this is a sell. And there's a lot of like momentum effects and like tax loss selling and so forth that kind of all piles on. So when you get these sells, you get pretty ugly sells, right? That's exactly what Jerome People was saying. So why is it bad? Market should. I know, right? That doesn't make sense. But You know what I think, Akshay? I think that the equity markets guys aren't really paying attention or understand this as well as they should. That's what I think. Because I've just seen so many times here where, you know, like, I know exactly what's going to happen, at least on the longer term, and it plays out exactly the way that I do. And I even understand, well, okay, the reason why you're not seeing it in the treasuries yet is because of this and this, right? Could be the case that we get like a rise in rates at the beginning of the year. If things are like really bad and like they're going to keep interest rates at 5% for a really long time, like 5 years or something like that, then yeah, the rates would have to go higher. But there might be a slight rise in rates, because I do kind of feel that below 3.5 is a little bit like, I don't know if that might be too low. But the equity market sometimes just seems to be completely clueless about it. I really can't come up with a better explanation for it than that. I think they wanted to sell and use news as a pretext to sell. Well, so the number of people out there that can actually like make that kind of a decision that I want to sell now, and so now I have a good enough reason to run my discretionary trade selling. I don't think that they're enough to create a move like that. Not in this situation. So it's probably much more a combination of momentum effects, the options gamma kind of becoming unhinged, end of year tax selling, etc., etc. And to be honest, the degree of upside that we saw yesterday, like we saw buying yesterday for like seemingly no reason. Shouldn't be surprised to see them I wouldn't have been surprised to see them retrace. Maybe not like the sell that we have now, but like, yeah, they're kind of. If GDP was bad, will they buy? Not really, right? Would they sell anyways? I guess. Yeah, no. So if it was bad, so we have to qualify bad, because there's like, if it missed. If US GDP quarter over quarter final was 2.8%, I don't know if that would matter. Okay, but let's try and draw a much more crazy scenario. US GDP quarter over quarter final comes out and it's negative. Okay, that's like a really unrealistic scenario. There's no way that they would be off on GDP by 3%. Okay, but let's just say, for the sake of argument, it's negative, okay, in meaning that there was negative GDP growth in the fourth quarter of this year. Then yeah, the equities and the treasuries would buy like insane. It would be like crazy, right? But the kind of miss that would be realistic, which would be like let's say a miss just as much the other way, so 2.6. Yeah, I think you might be right. It probably wouldn't be enough to really cause a very strong rally in the stock market. Maybe it goes sideways, but maybe the things that are driving the selling is more than that. Like I said, momentum effects, options, all these other things. You can get into this situation where it really was going to sell the whole time, and then they just needed the news to get passed so that they could start executing. Oh no, if the negative print got coupled with a 6% print on PCE, would that cause oh yeah, that would be so crazy. I don't even know. That would result in so much volatility. That would result in so much volatility. But yeah, the treasuries would definitely sell, right? If the PCE was that high, the treasury would definitely sell. The issue, so this game is more fun to play when we're talking about like CPI or non-farms or the PMI prints, right? Because these are like primary data series. They're leading indicators, and so there's like in non-farms payroll, you know, we've had that situation where like we were expecting 500,000 jobs created and it was like 500,000 jobs lost. That sort of thing. You know, like that sort of thing is crazy thing can happen in non-farms. The numbers that we got today, these are numbers that are based on a bunch of other stuff that we already got, right? So they can make pretty accurate predictions about what it's going to be. It's not very common to see the GDP final to be like a huge divergence from the street estimate. Same with PCE. PCE tends to only be like 0.1% different, right? So it's not as fun because all of the scenarios that we could draw out here where the market would like really freak out and react to it are like not realistic. Toby in Discord says it's a complete meltdown. I would say, yeah. I do wonder, by the way, when I look at this move, it looks quite organized. So I think that probably the end of your tax selling is probably the biggest factor. I want to finish writing this comment. So what I was saying there in Discord was just that we've seen like 3 legs down here now in the S&P 500. And there was, of course, some news involved in there, and that's certainly going to be a factor. But the way that it's moving really strongly suggests organized meta orders, that some large funds are coming in here and selling things. So it's probably the case that like end of month rebalancing. So there is a lot of stocks that need to sell and turn around and buy treasuries. So that's like one thing that's kind of going on. And end of year tax selling, you want to sell before the end of the year so that you can take the loss on your taxes and deduct it against your other income. Those are probably major factors behind the decline. So the only reason why I think that that's important is I always like to come in and point those things out when we're having a move that I believe retail traders are likely to put a lot of emphasis on. Because to a retail trader, it's like, it moved more, so that means it matters more. This is more predictive of what's going on in the market. And they're going to come in and they're going to look at this daily chart and they're going to say, see this candle right here, that means we're going to go lower. And now we're going to follow the 2008 and all that sort of thing. I don't think you can say that. I think that I wouldn't make any big conclusions about where this market is headed based on how it's already moved until January. And if you get a route like something that has happened in the past and is very possible to happen, is next week ends up being crazy. I don't think that it will. I think that they'll probably just be really quiet. But it could turn crazy and there could be like selling, and like, let's say that they come back to 3,700 or maybe even lower. I would buy that one. If I come back in January, I'd buy that one. Just some good chaps taking out some dough for the Christmas to buy baubles for the missus. Nothing of the tax related sort of nonsense. Okay. No, there's, I mean, so the tax selling one is really hard because we don't really have any way that I know of to quantify or see like how much of it is tax selling. So the tax selling is absolutely a speculative theory. But from the way that it's behaved in December and the points at which it did it and so forth, I really do believe that end of year tax loss selling is a factor here. AMC split is to reveal synthetic shares. AMC might rocket if shorts start to cover next week. We'll see. I think, to be honest with you, Stock Vader, although short covering can be a really strong impetus for a stock to move, that's something that you can get that can really effectively predict future orders and so forth, and can create a lot of momentum trading, right? But the data that we have does not suggest enough of a short position on in the stock to really justify a really strong short squeeze, unless there was something where like the general public got involved again. So all of these things in AMC, like you're saying, to reveal the synthetic shares. So the whole thing is that there's the issue of that the prime brokers can kind of create shares. Somebody wants to go short, I don't tell them no, I just let them go short, and I go and I find the shares later, right? And when that happens, that there's certain reports that kind of allow you to see that, but they don't reflect when you go and you cover it from another source. So you've got all of these people saying there could be all of these shares short, etc., etc., etc. It's highly unlikely. Possible, I guess, but highly unlikely. And having worked at a prime broker and having some insight into how the back office works and everything, there is just no way in hell that there would be that big of a short position that like Goldman Sachs would have to cover or something like that. It's just ridiculous. So I wouldn't get yourself too excited about it. So with that kind of buzzkill, it's time for me to get going, guys. I will see you tomorrow, and in the meantime, stay excellent, team.